Chris Cox says playing Dungeons & Dragons taught him a lot about being a CEO.
Being a dungeon master is basically being a collaborative storyteller.
Building worlds as part of a team informed his views on building a company.
I think, being a CEO is equal parts head as well as heart. And when you understand game design, you understand systems that underlie how people behave. And then the heart part of it is, how do you tell a good story? How do you get people believing in the mission?
Soon after Cox became CEO of Hasbro, the company that now owns Dungeons & Dragons, he needed to hire a CFO. He decided that person should play not one, but two critical leadership roles.
Were you looking for a joint CFO, COO? Was that already the position?
Yeah, that was ideal.
Cox picked Gina Goetter to be his teammate in Hasbro's C-suite. She says heading up operations and finance puts her ahead of the game.
I did tell Kristen, I'm like, when we do these traveling ones, we should figure out who else to go on stage besides just me and Chris and Holly. I don't see it as two separate roles. Every single decision, every single action that you're taking links back into the financial statements. We are really only working on the things that matter and ultimately lead us to delivering our financial commitments.
Everybody I've talked to about you says you're an operator expert. Is that your role here?
I am not an accountant. I love accountants. I hire fantastic accountants, but I'm a finance person. I gravitated to more of the roles where you're embedded in the business, and it's where I find myself at Hasbro.
You get to the execution phase, and that's really where I think she shines. As both the CFO and the COO, she's really the quarterback on the field, and I'm more the coach on the sidelines.
Cox and Goetter have taken on a serious challenge, leading the 100-year-old company into its future. They'll meet it with hard work and partnership.
We've got businesses that are very much in transformation mode, and we have brands and businesses that are very much in turnaround mode. We haven't been doing well and need to find a new path forward. I get energy there.
Gina's like the closest partner I have at the company. She's the architect of our transformation and our turnaround.
When Gina Goetter joined Hasbro, the company was hardly at the top of its game. Coming out of the pandemic, consumer products revenue was falling fast, driven by declining toy sales. The stock price was plunging as well. To start a turnaround, Hasbro needed a rethink.
Our costs were too high. Our brands were kind of out of position with where people wanted to play and what people were buying and what demographics were buying.
I think that in our first year working together, we did a lot of heavy lifting to get the bad complexity out. There's always going to be complexity in businesses. It's the bad complexity, though, that we have to shed. We also then took roughly 80% of our SKUs out, just to continue this theme of reducing complexity.
80%?
80%.
Wow.
In February 2025, Hasbro released a 5-point strategic plan called Playing to Win.
We really have to get back to fundamentals. Like, what makes Hasbro great? What is our fundamental superpower? The thing that we can do better than anyone else. And at the ground floor, it's really play.
There's this resurgence of it's okay as an adult to play. That's not necessarily playing with a toy, but all expressions of play. We have so many brands that you played with as a kid that you're now sharing with your own kids. So we definitely are tapping into all elements of that.
The toy consumer has remained really resilient. We see that even in tougher macro environments, parents tend to prioritize their kids, even if they're cutting back on high-ticket items. And from an affordability perspective, more than 70% of the industry is priced at $25 or $30 below. On that affordability spectrum, toys remains an important home entertainment for parents that they lean on in tougher macroeconomic environments.
The Play concept aims to broaden Hasbro's customer base. Now the company is working to focus its portfolio.
We've been pretty overt about here are the businesses that we are going to grow. We are putting a disproportionate amount of human capital, financial capital, our mind time, our focus time on getting those brands and businesses to grow. And then we have a very clear of here are businesses that are just kind of in a sustain mode, and there are other businesses that are in a big need for reinvention. But that clarity internally has allowed us to make easier decisions on where should that next dollar of investment go.
Growth comes from franchises like Magic: The Gathering, Hasbro's first billion-dollar brand. Legacy brands like NERF are getting a makeover with a new emphasis on play centers and community experiences.
The first step in solving kind of like our NERF challenges is understanding that not every solution involves a dart.
The answer to fixing NERF is going to be about the IP itself and getting that IP to resonate back into other areas of play.
The original positioning for NERF is the world's first indoor ball. And so I think you're going to see our teams really leaning into how can I bring safe, active play, regardless of context, back to life. Some of it will involve darts. Some of it will involve like water-based play, like we've been leaning on over the last several years.
Let's Monopoly go!
Talk about transforming IP. You can now play Monopoly on your phone.
Monopoly is now the biggest mobile game in the world. Monopoly Go has done billions of dollars and hundreds of millions of consumers.
That's just one example of Hasbro's push to be digital and direct with both classic games and new licensing partnerships.
You need to be relevant outside of the toy aisle, and you cannot be everything to everyone at the same time. So if you have a more sort of franchise building approach to these brands, how do you touch the consumer in different verticals? It's more about how do you have a long-lasting presence in the consumer life.
It is time for you to join the others.
Video games are huge for things like D&D with Baldur's Gate 3 and all the new games we have in development from our own studios.
What about getting your products in media? I mean, getting kids to play Dungeons and Dragons on Stranger Things must have been a huge boon.
The Demogorgon! I mean, we have an entertainment segment that is laser focused on that type of placement of our brands in entertainment. Entertainment continues to be some fuel for our businesses.
Its strategic plan has given Hasbro momentum in a year when U.S. tariff policy has caused headwinds and headaches.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
In June of 2025, Hasbro laid off 3% of its global workforce as it raised its cost savings target to $1 billion.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
For the industry as a whole, you have more than 80% dependence on China as a sourcing market. For some of the bigger players, that exposure is less, and they have more nimble, more flexible supply chains to navigate this disruption. For the medium-sized and smaller players, this has been very, very disruptive.
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027.
We're growing inside of Southeast Asia. Vietnam's a big base for us. India's a fairly big base for us. And then in Eastern Europe and Eurasia, Turkey is a meaningful base for us, and Indonesia is growing for us as well.
For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Coming up, a visit to Wizards of the Coast, where Hasbro's been putting big money into its big push into video games.
We have been investing, roughly call it $100-ish million for the past few years behind all of our video game ventures.
This is Bloomberg. Hasbro CFO Gina Goetter has spent her entire career working for consumer products companies, starting out in food.
I spent 20 years at General Mills. By the time I had progressed through kind of to my most senior positions at General Mills, I was leading big businesses, around the company, and focused on business operations and kind of soup to nuts re-engineering the business models.
After a short stint at Tyson Foods, she moved into the CFO seat at Harley-Davidson.
I imagine at Harley-Davidson, it must have been unique to have a woman as CFO, right?
I've had the good fortune in all of the stops I've had along the way where my bosses have prioritized that diversity of thought.
I've noticed also that a lot of people who work here seem to also play the games.
Mm-hmm.
They live in this culture.
Yeah.
And that must have been the same at Harley, right?
At Harley, you're right, I wasn't a rider, but I'm from Milwaukee. I learned how to ride. And here at Hasbro, it's the same thing. I mean, I grew up with all of the brands that we have on our toy side of the business. D&D and Magic were new to me, but learning. And the same way that I tried to learn how to ride a Harley, I'm learning how to play Magic. So it's important to me that I can connect with what we're putting out in the world.
Wizards of the Coast, which produces both Dungeons & Dragons and Magic the Gathering, is the growth engine for Hasbro. It's expected to contribute nearly 40% of 2025 sales. I visited Wizards headquarters outside Seattle with Gina Goetter to find out what magic Hasbro is casting to drive the success of these games.
This year, we launched Final Fantasy, which is the biggest set ever in Magic's history. I think it was the biggest set ever on day one of the launch. But it's not our IP. We're paying someone for that IP. But what we are getting is an expansion and an engagement with our player base. And that Universes Beyond strategy, we have a couple more that we're rolling out here in 25. But as we look into 26 and 27, we also have a nice, healthy balance of Universes Beyond sets that are just going to continue to grow and make that Magic ecosystem even healthier than it is today.
Dungeons & Dragons and Magic are aging, while the number of newer tabletop games grows. Keeping both D&D and Magic fresh is important.
How do you weigh the benefit of innovation or newness versus keeping the fan base happy because they must get angry when things change, right?
It is a vocal and healthy fan base. And as we launched into Universes Beyond, there was a bit of this, how are our core players going to respond? And is it going to do the job? Are these Universes Beyond releases going to do the job of engaging the core while at the same time building and kind of attracting new users or new players? Our first one that we did was the Lord of the Rings set back in 2023. And that one was wildly successful as well. And our original hypothesis was it was going to be a lot of new players coming in. But what we saw when we did Lord of the Rings was actually not that. We initially saw our core players engage in the IP. We also saw a lot of lapsed players get re-energized or re-interested in the game. Now that we're probably a year or so removed from that Lord of the Rings launch and we're watching all of the different KPIs within Magic just continue to grow, we can step back and say that Lord of the Rings launch actually did do that third piece, which was attract new players.
There are currently about 30,000 Magic cards, with more coming as Universes Beyond expands. But even in the age of AI, the designs are being made by humans.
All of the cards that you're looking at here are artist-driven. We are not leveraging AI to make our cards. So that is a place that we have kind of said, no, we are for the artists. That creativity is going to come from humans. We can leverage AI within Magic to speed up processes, but the actual art itself that you're staring at is coming from our artists themselves.
Can you bring it into the actual gameplay?
I think AI is going on the gameplay, whether it's D&D or Magic, will be an enabler, especially like with Magic. It is a complicated game. But now that I know the basics, as I go to play, I am able to leverage AI to help me facilitate my learning. I think that's a very individualized experience, but we know that getting players and attracting new folks in, having them learn how to play is a key element to that. I think that AI is going to be an enabler to help us get those people learning faster.
Hasbro continues to license its IP for video games with Monopoly Go and Baldur's Gate 3 bringing in millions for the company. In 2026, Hasbro is betting big on in-house game development with its expected release of Exodus.
It's a brand new IP. It's set in space. It's kind of D&D in space.
When you bring something all the way in-house, like an Exodus, what kind of numbers are you looking at? What kind of investment is that? What kind of payout do you want to see?
We have been investing, roughly call it $100-ish million for the past few years behind all of our video game ventures, not just Exodus. As we think about Exodus and the launch year, I am just looking for a nice single. We're not trying to shoot for the stars. We're not trying to be, a video game company that is doing 8, 10, 12 million units on a launch. Exodus, we have a lot of learning there too. It's bearing the brunt of a lot of first-time things that you would expect. A lot of first-time infrastructure setups, a lot of learning. As we move forward with the other games in our pipeline, we're able to leverage some of the scale and some of the infrastructure that we had to put in for Exodus. But we've also taken some of the learnings on just how to do the development even better. So Exodus itself is going to crack open the capability for us. The return that we're going to generate is going to be coming from these future games that are in our pipeline.
This is your last chance to bail, June.
Do it.
Coming up, CapEx decisions are never easy, but with tariffs biting into Hasbro's business, Gina Goetter's taking even more care with the company's cash.
Most of our capital is being spent on those businesses that aren't exposed to tariffs.
This is Bloomberg. With a new strategic plan setting its path forward, Hasbro's leadership feels optimistic that the company is moving in the right direction. It's also preparing to move its headquarters from Pawtucket, Rhode Island, to Boston's Seaport District. As both COO and CFO, Gina Goetter will face plenty of decisions. Wall Street expects the company's CapEx spend to reach new highs in the coming year.
Where is it most important to you to put money to work?
Most of our capital is being spent on those businesses that aren't exposed to tariffs. So whether that's investing in Magic and making sure that business continues to grow, we're spending a lot of our capital on these new video games that our first one is set to launch next year. The next pool of dollars is going to our transformation. We would put them in terms of their no-regret decisions.
Hasbro's focus on its asset-light licensing business has bolstered the company's bottom line. Leveraging its license of IP provides a low-risk, high-margin reward for the balance sheet.
Because I noticed you have so many licensing agreements and so many businesses where you're making like 50% margins.
We like our licensing business. So we've been in an asset-light model for a while, and we define that as we don't own our own manufacturing. We are actively pursuing any license that plays with the categories where we compete and that we have the expertise to win, because that just comes with some nice scale on the top line. And as you said, it's extremely profitable.
Licensing has become a big part of the industry. If you look at it globally today, about 35% of toy retail sales are licensed product. In the US, that percentage is slightly higher. Importance of IP becomes paramount because ultimately, who owns the brand will direct how that brand is presented to the consumer. So that space has become increasingly competitive.
Does the IP and the partnership business, do you think that becomes a segment that's bigger than Magic and D&D?
Gosh, that would be fantastic because that's basically pure profit. No, I don't think it becomes bigger than Magic and D&D. I think on a profit basis, no, but on a reaching consumers and total merchandise dollars, it's already much bigger.
In 2019, Hasbro expanded into entertainment, taking on significant debt to buy Canadian production company E1 for $4 billion. That deal didn't pay off. In 2023, Hasbro sold E1 to Lionsgate for only $500 million.
Let's talk about the debt that you have. I think it's $3 billion.
A little over three, yes.
What's a level where you feel comfortable? Where do you want to get that?
We've said that we'd like to get ourselves in that, call it 2.5 leverage ratio. If I had to peg an absolute number, we're probably carrying about $1 billion too much.
In spite of tariff headwinds and a softening of consumer confidence, Hasbro's stock has been gaining ground. While investing in the business and paying down debt has been its priority, the company has continued to pay a dividend.
When you talk to investors, what do they tell you? What is the message they're giving you?
It depends on the investor. Definitely, I think, returning cash to shareholders is something that they think is very important. A lot of them like the dividend. A lot of them would like us to, see us think about other ways that we could give cash back, like stock buybacks. I think they really like the licensing business and are waking up to what a gem that is for us.
Whatever moves Hasbro makes going forward, Gina Goetter will play an important role in seeing them through. I asked her what she sees when she looks ahead.
What's the opportunity for Hasbro over the next decade that excites you most?
I would say everything that we're doing in the gaming space. So while it is riskier than probably launching another toy or another Magic set, where we're headed on the broad definition of gaming is super exciting. I think that is going to be the single biggest unlock for our company, moving us away from being just Hasbro as a toy company to Hasbro is a play and we're a game company.
What's the biggest challenge for Hasbro over the next decade that keeps you up at night?
I would say the next few years, it's going to be navigating through the macro environment and getting our toy business on solid footing from a profitability standpoint. I think we've done a lot of good things in terms of reinvigorating innovation and getting our brands positioned well, but we need to be doing all of that in a lens of we're making money on that business. So I think the next few years is making sure that we're settled there and we've got a sustainable business model.
What's the skill set or area of knowledge that you would advise every aspiring CFO to develop or work on?
I will speak from my experience as I stepped into Harley, because I was a first-time CFO. I spent a lot of time figuring out how to take the complex and make it simple, and be able to understand how all of the numbers came together, the business model, what was driving the actual math, and then finding a way to be able to communicate that both internally and externally. Spending a lot of time with your investor base, listening, but really making sure that simple and clear, transparent story is understood and embedded.
Complete this sentence. The hardest part of being a CFO is?
The hardest part of being a CFO in a creative company with a gazillion ideas every single day is making the trade-offs and telling our creatives that it's a good idea, but it's not the idea that we're going to fund, or we're going to do it, but we're going to do it a little bit differently than what you had envisioned. So I think saying no is probably the hardest part. We have the blessing of a lot of creatives, a lot of good ideas, but some just aren't fitting with our long-term strategy.
A friend calls you up and says, I've got great news, I've been promoted to CFO. After you say congratulations, what's the first piece of advice you would give that person?
I would say make sure that you have a very good self-awareness of where your strengths are and where your gaps are, and make sure where you've got your gaps, you are hiring into your gaps. So I think as you're stepping in, especially the first-time CFO, it's going to be unrealistic that you will have every box checked on what it takes to be a really good CFO. So know where your gaps are, hire into them, and immerse.
I'm Matt Miller. This is Bloomberg.